A war premium in oil and rate hike talk from the Fed knocked the wind out of Wall Street, and the selling only got worse into the close. Investors spent the day pricing in a world where energy costs more, and the Fed stays hawkish, and they sold the most expensive thing they owned, which is big tech. The Nasdaq ended down about 1.5%, a steeper loss than the 1% decline we flagged at midday, while the Dow's old economy names cushioned it to a fractional dip. President Trump restarted the Iran blockade and proposed a 20% toll on every cargo moving through the Strait of Hormuz, effectively putting a tax on a fifth of the world's oil. Crude blew past $83 a barrel for its biggest jump in 6 years, and the United Nations Maritime Agency came out against the fees, which tells you nobody expects this to be resolved quickly. Fed Governor Chris Waller told markets the central bank should not fight the last war on inflation, but warned that rate hikes are still possible if this week's inflation reading runs hot. That was the second punch of the day for equities, because an oil spike and a Fed leaning hawkish are the two ingredients that turn a nervous market into a selling one.